Hello and welcome to Moneylife. This is Sucheta Dalal. What are we going to talk about this week? The markets, of course. I'm sure many of you are scared. Things have been in a turmoil all of last week, or rather, at least the last couple of days. But think about it. All good things must come to an end. This applies to governments, markets, and also stock exchanges. Recent global developments have underscored this truth. India's stock market has been the big, shining, bright spot for the Narendra Modi-led government. Nothing seemed to shake it until it finally cracked under the impact of a global stock market crash across Europe, US, and Asia. This is a market that had ignored the election results and the loss of a parliamentary majority, had ignored a lackluster union budget. It seemed unstoppable until 5th of August, it's 2 days ago. The benchmark NIFTY plummeted 3.3% or 700 points, and the ferocious bull run that began in April 2020, which has barely seen a couple of blips, seems rather shaky. Alongside direct equity investments, remember, Indians have been injecting at the rate of 20,000 crore per month through mutual fund systematic investment plans into the stock market. They have attracted corporate listings. In fact, somebody described it as a golden period for initial public offerings because just in the first 6 months of this year, 35 companies raised 32,000 crore, just until the first 6 months of 2024. And that's not all, they had record subscriptions. This exuberance of the market was in stark contrast to everything else that's happening in India or the mood of the people. There's public anger, there's discontent mounting due to crumbling infrastructure, potholed roads, railway accidents, poorly planned modernization, and the relentless rise in taxes, tolls, and cess. The middle class is highly frustrated, especially taxpayers. Youth are worried about unemployment. Students are distraught over corruption and manipulation in these so-called national online exams for engineering, education, and all the elite public public services, including medicine. Despite these issues, stock market couldn't be bothered. It continued to rise. It was buoyant. So what now if this change in the mood gets prolonged? It's not a blip like before when Adani happened or whatever. It doesn't bounce back, but is prolonged because this time it's global. Believe it or not, if this happens, the worst to be affected will be the National Stock Exchange. The NSE has become the world's largest derivatives exchange in terms of contract traded, at least for the past 4 years. And the NSE could be badly affected both in terms of its profitability and its plans to list. Let me explain why this is going to happen. You have to look back to the start of the NSE. For the past 3 decades, NSE, which is now a near monopoly, has been an anomaly. It was set up in 1992, not as a broker-run exchange, but as a professional one. It kept brokers out. It went on to transform, computerize, and modernize India's capital market. In fact, very reluctantly, India was dragged into the modern age and automation and a single-screen national exchange. The NSE then went on. It was praised so much, all of us were in awe of its achievements, that it went on to achieve third dominance over the capital market. In fact, it dictated to the regulator until 2015, when I exposed what is called the co-location or colo scam, which showed how select brokers were benefiting from privileged access to high-frequency trading. I have detailed the story in my book, Absolute Power, which I co-authored with Devashish Basu, which was published in 2021. If you want to know the history of India's modern capital markets, you need to read that. Now, a decade after that, the Securities and Exchange Board of India, which is from 2015 when I broke the colo scam, till about 2024, SEBI has been involved in a slow piecemeal investigation that has been dragging on. In fact, the last show cause notice was issued in February 2023. Okay. The NSE also contributed to this mess. Its board of directors and managing director, led by Vikram Limeye, who had come in to clean up the mess, challenged every SEBI order. which means everything was caught up in the morass of litigation. While some regulatory orders were partially overturned, so people may say it was a great strategy, it resulted in delaying NSE's listing, damaged its regulatory clout, and the issue has been festering. It has now gone to the Supreme Court as well. Meanwhile, look at what has happened. People had been buying NSE shares for a really long time, from 2009, in fact, when the initial founders began to dilute their holding. All of them bought on the promise that NSE will be listed and they will have an exit and they will be trading. And NSE is extraordinarily profitable, so it was a great share to buy. Instead of listing, what you have is a huge gray market in NSE shares. In fact, for the past 8 years, we have seen an illogical and hypocritical supervision by the Securities and Exchange Board of India. Why do I call it illogical? Because in December 2016, NSE, acting as though in 1 year all the co-location scam was over, filed a draft red herring prospectus. SEBI said nothing doing, investigations are going on. Meanwhile, NSE had even challenged it. In fact, NSE very foolishly tried to cherry pick what it will do. It says, we'll challenge your orders, but you allow us to list. Obviously, it wouldn't work. Meanwhile, the shares began trading actively in the grey market. So you have WhatsApp groups, Telegram groups, all major brokerage firms offering you NSE shares. And of course, the numbers are great, so it looks attractive. There are websites that have been set up. Take a look at the pictures, stockify.net and unlistedzone.com, where these shares are written about with daily prices as though it is a regulated listed entity. And SEBI pretends as though it knows nothing. SEBI is not looking at it. Remember, NSE is the key market infrastructure institution because it's a near monopoly. NSE is also a first-line regulator. NSE shares are being traded not for a few days or weeks, but for 8 years in an active grey market. And SEBI is pretending it doesn't know, it can't see, it can't hear. What kind of oversight is this? If this can happen, how seriously should we take SEBI's supervision of listed companies and the stringent disclosure rules and compliance rules that it's spewing out every day if such a big elephant in the room is just ignored, pretend as though they don't see it? Now remember, what is SEBI? SEBI is not just a capital market standalone regulator. The SEBI board has bureaucrats from the Finance Ministry, from the Ministry of Corporate Affairs, a deputy governor from the RBI, and an independent academic. Don't they get WhatsApp messages saying buy NSE shares? Do they not know that this is happening? But they are complicit and silent. How is all this going to end? So there's a glimmer of hope because in Jan this year, the new MD of the National Stock Exchange, Ashish Chauhan, with approval from his board of directors, has written a letter to SEBI where he asks for amicable closure to all pending litigation in connection with the colo scam of 2015. He says this can be done by settlement or payment of penalties. This is what my sources tell me. I also understand that this is not just being done unilaterally. There are institutional investors who are back to putting. For 10 years, they were silent, but they're now back to putting enormous pressure on NSE, asking it to settle the colo issue and pave the way for listing, or I understand they've even threatened legal action. Now, until February this year, media reports have been saying SEBI had been rejecting NSE settlement requests. Hopefully, it has woken up now because I now understand that SEBI is actually working not just on accepting a settlement, but reasonable penalties rather than ridiculous ones which cannot be accepted. They are also apparently agreeable to non-monetary penalties, like maybe some pro bono work under SEBI supervision, which NSE past and present employees would be asked to do. I mean, this is required because some of SEBI's own show cause notices have been quite ridiculous, and we have had many video blogs about them. Since NSE will be covering the cost of payment, including on behalf of employees, if it agrees to a settlement, this has to, of course, be cleared by NSE's board. So what is happening so far? Some fines may be paid when things have not been challenged. Some cases are being withdrawn. And in fact, a start was made in July this year when it decided to withdraw an appeal before the Securities Appellate Tribunal. This was in connection with sharing of illegal data to a favored academic consultant and his relatives. Like I said, NSE will be paying the fine imposed by the regulator in this case and in others. Now there's a question of the case in the Supreme Court. That is an appeal filed by SEBI and is pending. There's no stay order, and in fact, SEBI was asked to pay 300 crores. Will this be withdrawn also as a part of a big settlement? We don't know. If SEBI continues to dither and wants to keep this festering, then it is high time that the finance ministry steps in, because don't forget, SEBI orders are less than great. In fact, SEBI has been repeatedly embarrassed for its weak and contradictory orders by the Securities Appellate Tribunal, because SEBI repeatedly asked NSE to investigate itself by appointing forensic experts and outside consultants. Some of those reports are not even complete after nearly 9 years. In fact, they're not complete because SEBI wants to bury it. So everybody wants to bury this. The people are fed up, investors are fed up, and I think everyone, including someone like me who broke the Colo scam, think it's high time that it was closed. It's gone on for almost a decade, and it's an embarrassment for India. Now, what is the backstory to this? Why do I need to tell it? Because India's investor population has exploded after April 2020, which means that 9 out of 10 investors have no clue what is a Colo scam or why they should be bothered about it. All they know is that NSE is very, very profitable. It's a regulated entity and it is a great share to buy. They don't care about how its illustrious history, how it transformed markets, or the fact that there was a managing director who ran the exchange with such hubris, like a personal fiefdom, that she even had the temerity to tell investigators that her actions used to be guided by a Himalayan guru. Nobody cares about that anymore because 90% of investors, or rather 9 out of 10, have come in post April 2020, and we're talking about a Colo scam of 2015. Meanwhile, like I said, nothing remains constant. These happy days may not last. NSE shares have been traded in the grey market between 3,400 to 3,700. At one time, they soared to over 5,000. This is what those charts tell me, because we don't track it on a day-to-day basis. Any shift in market sentiment, global or over here, is going to affect this price. People have bought at very high rates. People have bought about 3,000 in the expectation that it will list much higher. Some people have waited 15 years very patiently for this listing. You also have another question mark because SEBI has issued draft guidelines on index derivatives, which, if implemented, could affect NSE's profit by reducing the big froth and volumes in derivatives. When there are huge volumes, NSE benefits and profits. Now, a responsible government and a regulator would do well to understand this, that markets go up and down, conclude this unending investigation and litigation, and facilitate NSE's listing, because when a large number of investors are focused on the exchange and what it does, it will ensure greater transparency and scrutiny by a larger body of stakeholders. Mainly shut down the grey market, because that's a blot on SEBI's reputation. And NSE IPO and its high valuation will also absorb some of this large amount of money that lands up with mutual funds and portfolio managers, which is looking for good investment opportunities. It's a win-win today, but things are already shaky. And if the government doesn't wake up, it would have lost a good opportunity. If you're one of those who's been buying shares of NSE, remember it is still a grey market. So what you're doing is not legal, and your investment depends on listing. So if you have, spread the word, subscribe, and make your voice heard. Thank you.